Hello traders, Gary Wagner here. Just about 12:20 in Honolulu, 6:20 in New York. It is Friday. Happy Aloha Friday, as we say on the islands. 21st day of December, 2018, and this is the Daily Report for Gold and Silver, our weekend review. And what a week we are witnessing. It is ending on a note in which it appears very likely that we will see a government shutdown within about 7 hours from recording of this video report. Now, a strong dollar today definitely put pressure on gold. Gold trading off by $8.80, currently bid at $12.5910. And that, of course, is Space's most active February's contract. Silver losing well over 1% today, a net decline of 17 cents at $14.69, and palladium being hit pretty hard, down $31 at $11.60 and change. Now, as I said, it was dollar strength that really precipitated this fall in the metals. The dollar itself is up 0.75% and is at 96.47. However, U.S. equities continue to sell off. Today, we had a 400-point decline again in the Dow Jones Industrial Average, 22,445. Composite down over 2% today, and that particular index closed at 6332. And lastly, the S&P, 2% drawdown at 2416. Traders, this week can go down in history as having the greatest declines ever in U.S. equities in terms of points and maybe in terms of percentages. When we look at the marketplace itself, this market, since October, we are looking at a weekly chart trading at 26,938, is now closer to 22,000. That is approximately a 7,000 point drop over the last couple of months of trading. We can really see how dramatic this week was when we go ahead and we blow this chart up and take a look at the activity this week. A tremendous move from about 24,000 to about 22,500, and there is a distinct possibility that we could see further erosion in U.S. equities next week. And traders, although the dollar had some really tremendous strength today, it certainly sold off on the week. It closed much closer to the high than the low. We can see this particular candle type, which would be indicated of a hangman. Now, a hangman and a hammer are the same candlestick type. The differential is where they are found in the trend. When found after a defined uptrend, we can certainly say that it meets that criteria for the dollar. We would call this a hangman. If it is found after a defined downtrend, it would be called a hammer. But nonetheless, it closed near the highs, but it did close lower on the week, which brings us to this week's activity in gold. So traders, although gold did close lower on the day, it certainly made some respectable gains this week, as we can see on this weekly candlestick. Important when we look at it on our weekly chart is the fact that earlier this week, we broke above what we considered to be a strong level of resistance, which resides at $1,246.40. That, of course, is the 50% retracement. However, we saw a moderate decline today as the market came down $8.80. And so traders, when we do look at gold through a weekly chart, we can see that the vast majority of the gains this week actually occurred yesterday. Yesterday was a $20 move as it opened at this critical level at $12.46 and then closed plus $20 higher on the day. Now, the day before that, meaning Wednesday, was the first occurrence in which gold prices actually breached the long-term 200-day moving average, although on Wednesday's trading activity, the market did close below that particular price point. But yesterday, traders, we had a healthy and sustained move above that and a strong close above that, as witnessed by this daily candlestick chart. even with today's decline of $8.80, that is this red candle here, we can see a couple things that to me are extremely noteworthy. The first thing is the low went to, but not below the 200-day moving average. And the second thing is the fact that we closed well above the 200-day moving average. So in light of a strong US dollar, which was 100% responsible for the move down that we saw in gold today, I believe that gold held up rather well. Right now, we are long this market. We are long this market from some dollars behind here. We did enter a position yesterday, and we have a current stop in place. Traders, for the first time since May, we actually saw gold pricing move above the 200-day moving average. That, of course, signals the real potential that what we will witness next year will be a long-term bullish trend. Throughout the last couple of weeks, I have spoken about the reasons why I believe that that will come into fruition. But as we go into our holiday weekend, I want to wish you and your family a very Merry Christmas, a great holiday season, and a blessed New Year. From all of us to all of you, Merry Christmas and Happy New Year. Bye-bye.